I think we spelled your name wrong, or one of us did anyway.
Oh yeah, in the email. Yeah, sorry.
Yeah.
All right, so Steve, I just want to thank you for coming on today. We were kind of having this conversation. What was it, 2 weeks ago, Brian? You know, my business has really started ramping up with working with investors.
Right, me too.
You know, a lot of it was as our meeting that we had with you when you were out here in Seattle, kind of going over building wealth through investing in real estate. So I really appreciate you coming on, especially since this current, you know, the COVID-19 epidemic is obviously
That's
sending
changed in
shockwaves.
the last few weeks, hasn't it?
It has.
Just a little bit, yeah. And so let me introduce the audience who will be
Sure.
watching this. Steve Chater is the co-author of a national bestseller called Hold: How to Find and Buy and Rent Houses for Wealth. Steve's also contributed to the Millionaire Real Estate Investor, and Steve has sold over 2,000 homes in the Phoenix area. And he helps, there it is, there's the book. He helps investors build millions of dollars in wealth. Steve's a mentor of mine. He's provided us with some fantastic insight. Thanks for coming on and sharing what's going on. How's Phoenix?
You know what? We are still going strong. It's amazing. I had an agent, so we're still having multiple offers on affordable properties.
Right.
And I had an agent who was complaining that instead of the house selling in 2 days, it took 5 days to get a buyer.
Oh man.
Rookie.
Yes. Yeah.
So are you guys quarantined at all right now?
Yes.
Okay. But
You
there's
know,
still
it's not a
smoke.
mandatory quarantine. I'm in the office right now. I have a property management company. They are all working in the office. We're taking all the precautions, but we're still working on behalf of the investors.
Okay, so let's get to the point. Right now, it's pretty uncertain times. Real estate investors are pretty scared. What advice do you have for them?
You know what? Warren Buffett said this about stocks. He says, buy when people are afraid. Okay.
Right.
When
They're having a
sell
sale.
when people are confident, right? Or something along those lines. This is actually one of the things that I'm finding is people are really, really concerned about what's happening in the stock market. It's going up, it's going down. People have lost a lot of money, including me. And anybody who has money in the stock market's lost money, even though it's coming back, hasn't come all the way back.
Right.
In the meantime, my properties are still cash flowing. My
Right.
properties are still going up, and I'm acquiring properties right now. I just went in and refinanced a couple of my properties so I can acquire more.
So, Steve, one of the things that you shared with me is, and I think this is true in real estate as it is in stocks, is you only lose money when you sell something.
Yeah, that's the truth. Right.
You know, so if you were to sell your stocks right now, yes, you will have lost. But if you hang on to them and the market recovers, there's really no loss, really.
Well, there's even more than that. It depends. If you bought your stock and it went up to here and it came down to here, but you bought it here, if you sold it, you're still going to pay tax on this amount. Even though it's not as much as it was, you're going to pay tax. Okay, well, then once you pay tax, now you have this much less in order to be able to reinvest. So, same thing with real estate, but that's why we call the book Hold. The way to build wealth is to hold the properties.
Right.
So Brian,
did you have a question?
Yeah. So if we're at the top of the market, is it time to sell investment properties?
Oh, no.
Yeah.
Okay, so
I think you just answered that, really. Hold.
Yeah, right. I did. But you know what? Okay, so it depends on what you went in with. Look, when we wrote The Millionaire, and I'm not the author of the Millionaire Real Estate Agent book, I was just a contributor to it. But one of the things that Gary Keller identified in that Millionaire Real Estate Investor book was that you can be one of four people. You can be an investor, or you can be a speculator, or you can be an observer, which means you're watching what's going on. You know what's happening, but you're not doing anything with it.
Sure.
Or you can be a collector, which means I only buy pretty properties, ones that have roses in the front yard, right?
Right.
So if you're a speculator, this could be a good time to sell, because if you don't have a positive cash flow on that property, then you are worried about what happens. Does the value go up or down? You bought it to speculate on the price. Yeah. But if you're an investor, and that's what we're talking to is investors, if you're an investor, you're not selling right now. In fact, you're looking to buy.
Right. So, a thought I had too when you were talking about comparing stocks is 1031. I mean, you don't need to pay taxes on the gain. So even if it's up and then it drops, but you're still above, stocks you sell, you still pay that tax margin. With real estate, 1031 exchange, way to go. I mean, so much better. So
Well,
much
and that leads me to my next question, Steve,
Okay.
is as we look at this, there's an individual who approached me last week and they asked me, they said, Dan, I've got this property here and, I was a reluctant landlord. So, during the crash in 2008, they had to move out of state. They've just started to rent the property out and we've recognized incredible gains. And for whatever reason, and I talked to him a couple of times, he's not cash flowing. And I was just like, listen, you've got to liquidate that property. You shouldn't be sitting on a property, either raise the rent so that you can cash flow, put more money so you can cash flow, whatever it is. But he's at a point where he needs to sell. There could be a lot of people out there in a situation where they have now recognized the max gains that they see, and they may be time to roll it over. Can you kind of describe that strategy there?
Okay, so you just talked about somebody who I call an investor by default. And they didn't intend to be an investor, but they are. They have just now experienced that by being an investor, they have equity in a property.
Yeah.
How cool is that?
That's very cool.
So there's a bunch of questions to ask with that. What's the interest rate on the loan that you're currently carrying? And can you refinance that property? Because right now at Keller Williams, now I've just done this with two of them. I used Keller Mortgage. I pulled $500,000 out of one property, and my total closing costs, which include my prepaid setting up for taxes and insurance, was only $1,600.
Wow.
Are you kidding me?
No, that's great.
So,
yeah.
Right.
You're
And
probably
so,
at a record low rate.
Yeah, absolutely. And
Yeah.
so we're at 3 3.8 or something like that. Okay, so could you refinance and save money? Now, I refinanced the mortgage. I added, this is my story, but I added $200,000 to the mortgage. My payment is lower than what it was before. And so now I've got $500,000 that I'm out buying other properties with.
Nice.
Because if I can't make 3.5% return on the properties, that's crazy. Now, I know I haven't answered your question yet. So what does this person do? First thing they do is they take a look and see, can I reduce my expenses in that property by refinancing? And if I can, awesome, hold it. If I can't, by refinancing, then the next question is, am I charging market rents for that property? So, sorry, I just lost you. So market rents in Phoenix have gone up like crazy, and many of the investors and many of the property managers are not taking advantage of today's current rents. Okay. Now, as you know, Dan, I talk about return on investment all the time.
Yeah.
Okay. So I'm going to go one more step with this investor that you're talking about, this investor by default. I don't know how old the property is, but the question is has it been upgraded recently? I'm finding that I can put $25,000 to $30,000 into a property and I can increase the value by that amount. Great return on investment. But I can also increase the rents so that I'm getting a 20 to 25% ROI on the money that I'm putting in, which just sounds crazy, but that makes sense to borrow the money on a credit card if you have to.
For that kind of a return, yeah.
So there's three things to take a look at there. If they totally want out, then I want to be the one that buys it. I want to be the one that fixes it up and re-rents the property.
Oh, there you go.
Bingo. Actually, I like that thought process.
That's good.
But, and obviously the cash flow is the key, right?
It is the key.
And I think everything that we've ever talked about, a lot of people consider the whole flipping thing as being investing in real estate. And the truth is, it's all about the cash flow. If you have a predictable cash flow that has enough cushion in it, there's no reason to ever liquidate that asset. Or is there?
When I was up in Seattle, I made the statement and I showed the article from NASDAQ that said the majority of Americans may be financially and economically illiterate.
Right.
And so they call themselves investors when they're not investing.
Hmm.
So if they're flipping properties, there's nothing wrong with that. You want to flip if you can, if you need to make additional cash, but the investing part is holding on. And so flipping and holding are two separate things. Holding is investing. Flipping is a business of adding value to a real estate deal and then selling it for a profit. Well, then what are you going to do with the profit? And most people don't understand that the thing to do is to track the return on investment that I'm currently getting. And am I getting a good return? And so can I tell you a quick story?
Please.
Sure.
All right. So I had a guy, he owned a property here in Tempe. He had it for over 20 years. The tenant paid it off for him. He had moved to Colorado and he was really happy. But, you know, brand new real estate agents are being trained. Call somebody. Everybody's got lots of equity. Call those people up and see if they want to sell. Okay.
Right.
So the new agents are calling him up and he goes, yeah. Oh, wow. I can get all that equity. That's cool. So he puts the property up for sale. Person who bought it got a great deal on it. He was happy with the sale. The buyer was happy with the sale. Buyer fixed it up, flipped it, and made some money on it. He takes the money and he said, you know what? Nobody told me about the taxes I was going to have to pay.
Yeah.
The capital gain, the recapture, the depreciation. And he called me afterwards and he said, Steve, I can't replace the income with the cash that I got. I can't replace the income that I was getting from the property.
Right.
I wish I had not sold. Yet people who don't know what they're talking about are saying, oh, now's the time to sell.
Right.
No, properties are get rid of them, get your equity. Yeah, okay, that's the ignorant bleeding the ignorant.
Wow.
So Steve, you've been through a couple of downturns, right? You've been through a market where things just kind of looked bleak, obviously.
Right.
I mean, how long have you been doing this?
43 years.
Okay, so just
Wow.
what, 3 or 4 shifts in the market.
Right.
So how do you keep buying property? And Brian and I joke about it all the time. It's never been a better time to buy. How do you keep buying property, especially when you're faced with economic uncertainty like we're looking at now?
Okay, so it just goes back to what you said before. I never lost money on a property I didn't sell. So I'm acquiring cash flowing assets, not negative cash flow, positive cash flowing assets. And the more of those that I have, there's 2 things that happen with it. My return on investment comes from, does the property appreciate? If it does, great. If it doesn't, as long as somebody else is paying down my mortgage for me, I'm still getting a great return on my investment. In fact, you can calculate it out, and over a 20-year period of time, it'd be about 8% per year, which is the average of what happens in a stock market if the property never appreciates, right? So today, the reason to buy properties today is the interest rates are low or lower than they've ever been. Right. And so the key now is, okay, let's talk to an investor. Let's talk to a savvy investor who understands money. If you can lock in money at 3.5% or 4% or 4.5% for 30 years fixed, when we did the research, Dan, about for the Hold book, and we went back and we said, over history, what did the interest rates average? It's 6%.
6, wow.
So
is right.
So locking in low interest money to buy a positively cash flowing property, this is the best time to buy. And we don't know, you know, there's another statistic that Gary Keller shared with us at Family Reunion. And he showed that the average number of Americans that live in single family homes, it runs like this, like 65%. They're just pretty much flat line, 66, 67, right in that area. The average number of people that own them is going down. And so that's creating a great opportunity for the investor, because we have all these people that want to, but they don't own. So 1.5 miles from me right now is an entire subdivision that is being built, and you can't buy one of the houses because they're renting all of them.
Oh, wow. That's
There
a shift.
this is, and Wall Street is in buying properties, and they're buying 300-400 properties a month. What's the issue? Positive cash flowing investment that appreciates in value.
Well, Steve, I
Well, you
really
just answered
appreciate
my
it.
next question is what
Yeah.
types of homes are good investment? Positive cash flow homes.
Right.
So it's really a issue of what the rents are and what your payment's going to be.
Yeah, absolutely. And
So-
we've got the tools to determine, is it going to be a positive and what's the ROI?
Yeah.
And so, and our ability to get a 15% return on investment, I can do that all day long. That's why I
Wow.
refinance my properties.
Right.
And Steve,
Amazing.
you're working in Arizona. We've got people that live here in Seattle and also have a house in Arizona. Would
Right.
you be able to help them invest?
Oh, absolutely. Absolutely. It's what I do best. I'm like Tigger.
Well,
Yeah.
Brian, do you have any last questions for Steve before we let him get back?
No, just the last bit of wisdom. What's the one thing an aspiring investor should always remember?
Well, before I answer that question, let me go back to what Dan was talking about. You got
Sure.
people in Seattle that might have properties down here. The question is, do they have a property that's giving them the return that they want? Should they upgrade it? Okay. Because I've got clients that have properties that they're renting, they're doing well, but they would be doing much better if they upgraded. And so,
Nice.
so that's a big deal.
Right.
So your question about the aspiring investor?
Yeah.
Well,
Yeah,
number one, read my book.
Read the book. Good. Good
Okay.
advice.
Number two, do what it says.
Okay. That's a joke between Dan and I. We always wonder why people hire a pro and then don't listen to them.
Oh, exactly.
The people that listen to us get a great outcome. Those that don't, not so much.
Right.
So, yeah,
Right.
that's great. Steve,
No,
thanks
you
for
know-
joining us today. That's
Yeah,
really
my
helpful.
pleasure. My pleasure. I'm
terrific.
excited about this. We have investors that are avidly investing right now. And you
Yeah.
know what happens? Okay, so let me just give you one more parting thought.
Sure.
If this market continues to, and I'm talking our economy, not our market, our real estate
Right.
market is still strong. People want to own properties and there weren't enough of them built. And
Yeah.
so it's raising, if our population's growing, we're doing well. But
That's great. Yeah, same here.
if you've got a free and clear property in this and in a declining market, and you have people that have free and clear properties, we can talk about more sophisticated strategies about investing,
Sure.
divesting, and acquiring properties. We can do that on another. And I'm not talking about today, but I'm talking
Yeah.
about if there gets panic in the market. Look at free and clear properties as being a huge opportunity to use seller financing to create huge value.
Wow.
Good to know.
I like that.
That's great.
Steve, thank you
Right
so
now,
much for
the
coming
deal
on.
is lock in the low rate.
Get
The
that
low
cheap
rate,
money.
Yeah, yeah. And I have somebody in Arizona I'm going to have you reach out to. So I appreciate you
I'm
coming on.
happy to do it.
That's
Happy
great.
to do it.
Thank
Okay,
you, Steve.
guys.
All right.
Stay